I wanted to do a really quick public service announcement kind of video about the stock market valuations at the moment. So the American stock market, very close to all-time highs. Japanese stock market, very close to all-time highs. Gold, all-time highs. Bitcoin, very close to all-time highs. Everything has gone up massively over the last few years. So what should you do about it? Do we need to sell stuff? Do we need to reposition? Is there an AI bubble? What is going to happen and how should you react in November 2025? Let's talk about it. So I think the most important thing I should say in this video is that I have no idea what's going to happen. No one does. So there are several possible scenarios that could play out in the next few weeks, months, even years, and we have no idea which one is going to happen. Now, the first scenario that seems somewhat likely based on the valuations we've seen and the way that the AI companies seem to be kind of investing in each other and this kind of weird kind of circular movement of money, there could be some kind of market correction or even a market crash. This could happen tomorrow, it could happen next month, it could happen next year, and it could happen sometime after that. It's likely going to happen at some point, at least some kind of correction where the market falls by a certain amount, but we don't know when it's going to happen or how far things are going to fall. On the other hand, it's quite possible that the kind of growth we've seen recently, where the markets have gone up quite a lot in the last year, 2 years, 3 years, could continue. We could see stock markets going up for another few months, another year, another 2 years, maybe another 3 years. And in that situation, selling everything now and sitting out until there's some kind of correction would be a very bad mistake. We could also see growth slow down so that there isn't a significant correction, but things don't really go up very much either. We just kind of trundle along, not really making any progress. Any of those is possible and the timing is unclear. We don't know what's going to happen or when it's going to happen. Having said that, we can look at what you might want to be doing, and this is mainly going to depend on where you are in your financial journey. I'm going to break this down into 4 stages. So there's basically 4 stages of where you are with your finances. I'm going to look at stage 0 first. So stage 0 is you haven't started investing yet. You're not really saving and you're not investing regularly. And if you're at stage 0, regardless of what the stock market is doing, whether we're at all-time highs or at all-time lows, or there's some kind of crash going on or there's not a crash going on, doesn't matter. The most important thing for you is to get started. In Japan, getting started means saving up an emergency fund, opening some kind of investment account, a broker account. Now, if you're American, this might be with Interactive Brokers Japan. We've got a video about that on the channel. If you're not American, you might want to use one of the big online brokers here in Japan. That would be Rakuten Securities, SBI Securities, maybe Monex Securities. They're all pretty similar. With that account, you're going to want a NISA account. A NISA account allows you to invest tax-free. So if you're going to invest, you might as well do it in there. If you're paying income tax and you're planning to stay in Japan for a long time, you might want to look into iDeCo. That's another kind of retirement style investment account. Once you've got those accounts open and you've got a little bit of cash savings for emergencies, you want to start investing regularly into a broad-based low-cost index fund. You basically want to invest in the world stock market, and by putting money into this month in, month out regularly, you're going to take advantage of the ups and downs of the stock market, and over time you're going to be able to build up quite a significant amount of investments. So if you're not investing yet, don't worry about what the stock market's doing, just get started. So open those accounts and start investing. Next is stage 1, and stage 1 is the accumulation stage. This is where you are saving and investing regularly. Every month you're putting money into NISA, you might be putting money into iDeCo, and you've been doing this month in, month out regularly. You're not really paying attention to prices, you're certainly not trying to time the market. If that's where you are, you're still not there yet, you're working towards your eventual financial goals, just keep doing that. Don't worry about prices. Don't try and be clever. Don't try and time the market. Don't even pay attention to the market. Just keep putting your regular investments into something sensible and you're going to end up in a very nice place. If there is a market correction or a market crash, that's fantastic. That's exactly what you want because your monthly investments are going to get you much more for the same amount of money. You're going to be able to get more investments for that same monthly payment. So a market crash is exactly what you want if you're in the accumulation phase. Stage 3 is the financial independence phase. This is where you have enough money. You reached your number, as it were. So you've got enough now invested and your investments are going to continue growing until you need to start spending them. But you don't necessarily need to save and invest every month anymore because you've already finished accumulating. Now you can just leave your investments to keep growing over time. For people in stage 2, the biggest factor is going to be when do you think you're going to need to start spending? When are you going to have to start selling your investments so that you can use that money either for living expenses or to help provide for retirement or to allow you to stop working or that kind of thing. If you're going to need the money quite soon, you might want to think about shifting some of your investments out of riskier things like stocks, for example, into maybe bonds or cash so that that money is going to be less volatile as you get closer to the point where you need it. Don't see yourself needing your investments for the long term, so for like 10 years, 15 years, 20 years, then by all means just leave it. Don't even think about it. Ignore the stock market noise and just leave your investments to grow over time. Stage 3 is where you are using your investments to live on. You're selling them, you're drawing down on your portfolio, and you're using that money for living expenses or just to spend on things that you want to buy. For people at stage 3, again, it might be worth looking at your portfolio and thinking about diversification. So you might want to think about diversifying your portfolio again, so shifting from riskier assets to less volatile assets. You might want to move some of your money out of stocks into cash, out of stocks into bonds, because you're going to want to spend it soon. And if there's a huge market correction, if there's a stock market crash, that's not ideal if you're selling your investments regularly so that you can spend that money. Now, I'm not saying that people at stage 2 or stage 3 need to do this. It may well be that your portfolio is completely fine and you're happy with how it is. You don't need to make any changes. But if you're already drawing down on your portfolio or you're going to start doing so soon and a lot of your portfolio is invested in more volatile, kind of riskier assets, it might be something to think about. For anyone else, anyone who hasn't started investing yet or they're still in the accumulation phase, definitely don't make any big changes now. And if there is some sort of market correction or market crash, that's great. That's exactly what you've been waiting for. I would say I'm probably at stage maybe 2.5. I'm not drawing down on my portfolio yet, but we're fairly close to doing so. And we certainly hit our number a couple of years ago. So this month, what I did is I moved some of our investments into cash and some of our investments into bonds. Not very much, only about 10% or so, but doing so made me feel a lot better about where our portfolio is and how our portfolio might behave under different types of scenarios. So that might be something that you want to think about if you're in a similar situation. But how about you? How's your portfolio looking? Are you planning to make any changes? Let us know in the comments. Thanks for watching and we'll see you in the next video.